Welcome back to our corporate accounting class. Today I am going to tell about profit prior to incorporation. Already theoretical explanations I have given. In this today I am going to solve a essay type question in profit prior to incorporation. This is the problem taken from Oral Gupta Radhaswamy, page number 14, problem page number 10.32, page number 10.32, problem number 14. This is taken from Arulupta Radhaswamy, new edition. See, this is the full-fledged problem. If you practice this problem, you will come to know almost all the aspects of profit prior to incorporation. Let us go one by one. See, what is a profit prior to incorporation in this? What are all the expenses given in the problem? We have to apportion that expenses into pre-incorporation period expense, post-incorporation period expenses on the basis of sales ratio, time ratio, weighted sales ratio, weighted time ratio. Okay. See, first let us take a first point, gross profit. Gross profit is always related to sales. Okay, so based on sales only gross profit is interpreted, so it is apportioned on sales ratio. What is that sales ratio? Total period of sales for the pre-incorporation period and total sales for the post-incorporation period, that one is taken. In this case 25 lakhs is to 35 lakhs. If you simplified that, that comes to 5 is to 7. And another one is, what is the time ratio? The period for pre-incorporation period, from the date of start of the company up to the date of incorporation. Post-incorporation is from the period of incorporation up to the period of year end as per the information given in the question. Okay, so based on that, here the time ratio that comes to 4 is to 8. If you simplify that, 1 is to 2. Now take a gross profit, it is related to sales, so apportioned on the basis of a sales ratio. Then rent, based on the period occupied by the tenant, we are paying the rent. So how many months I am residing in that place? For monthly basis only I am paying the rent. Okay, so it is apportioned on time ratio. Sales, only on monthly basis we are getting the salary. See, if it is on daily basis, that is different. Whatever it may be, it is based on the period only. So we have to take it on a time ratio, that is divided on time ratio. Director fees, it is straight away allotted to, allocated for post incorporation period. Why? Because director is the position that comes into picture only if it is a company. When the organization will attain the position of company only if it is registered, that is incorporated as per the provisions of Companies Act. Okay, so straight away allotted for, allocated for, taken for post incorporation period. Interest on debenture, only the company can issue the debenture, so that is also for post incorporation period. Audit fees, please put a mark on this point. Audit fees, see, actually in this problem, in this text, it is given as allotted for post incorporation period, so accordingly we are taking it for post incorporation period. But normally audit fees is applied for, is related to all the organizations, right? Even if you are having a xerox shop and it earns a huge amount of income, that is also that accounts should also be audited, so we have to take it for normally time ratio, whereas in this case it is specifically given with the instruction allocated for post incorporation period, so accordingly we are taking. Then another one important point, that is a discount on sales. In the name itself it is given discount on sales, so it is taken apportioned on time ratio. Then next point is general expenses. Any item in the name called general expense or miscellaneous expense or common expense, those things are time ratio only. Then printing and stationery. This is the direct indirect expense, and it is taken on time ratio because every month I am consuming the level of stationery, amount of stationery. Every monthly what I am consuming for, what I am spending for printing. Okay, so it is based on time ratio. Another one is a commission on sales. This is also related to sales, specifically given as a sales, so it is time ratio basis, right? The basis of apportionment for this commission on sale is uh, sales ratio. Then advertisement. Advertisement is closely associated with the sales, so it is apportioned on sales ratio. Bad debt. This is another one important point. You please put a mark on that bad debt. That bad debt is in this question it is given as monthly basis, right? Per month it is how much amount is incurred as bad debt. So since it is given as a monthly basis and a specification is given, so we are taking it as actual. Otherwise, it is related to sales, right? So interest to vendors. It is given as per month how much amount. So based on that time ratio we are taking depreciation. See, if you are using the machine, if you are using the vehicle, if you are using the asset, certain type of assets, then automatically depreciation will come into the picture. So based on the usage only, you will have the depreciation. So it is apportioned on time ratio. So now you have to total pre-incorporation expenses, so total amount that comes to 3,28,000 and post-incorporation is 6,70,000, right? Then gross profit minus the expenses what we have apportioned, balance that comes to 4,22,000 for the pre-incorporation and 3,80,000 is the amount for the post-incorporation period. So now we have to take profit prior to incorporation like this. Okay, so the final answer is net profit what we apportioned for pre and post, that is the answer. So what are all the things to be considered for in this problem for this chapter profit prior to incorporation? First we should know what is time ratio. Number 2, what is sales ratio. Number 3, what are all the expenses given? Those expenses should be taken on the basis of time ratio, that is period based on the period, or expenses taken based on the sales. Accordingly we have to apportion. Okay, so this is the full-fledged problem. This is qualified one for both essay type as well as sometimes this may be asked for short type question, that is for 5 marks. Okay, try related problems.